Morning, Steve Free in Chicago with the morning grain comments. Well, I think the three issues that the market has to deal right now with is, number one is the weather across the United States, with the stationary front dropping above normal rainfall across most of the Midwest over the next 10 days. One map shows the rain's a little bit further south in the Corn Belt. The other one continues to show it mostly across parts of Kansas, Nebraska, Missouri, Iowa, into northern Illinois and southern Wisconsin. So we'll have to kind of watch those areas pretty close. The second thing is just money flow. I mean, you look at the grains, technically they look okay. And you look at the CRB index, it's up because of the energy market. And sanctions against Iran could push energy prices even higher. So it looks like there might be a group of people out there just buying the grains, kind of following the trend. With that, I do think farmers should be looking at 2018, 2019 corn and soybean cash sales to increase if they aren't up to what the market is right now. If you look forward to 19, $9 beans, $4 corn might be a good price given your cost of production to start doing some cash sales. You know, we usually have a bounce in the spring, but next year, if South America, Black Sea, Europe all have normal crops, you won't see much of a rally in prices unless there's a weather problem in the U.S. Also, from an end user standpoint, when you look at corn and wheat, you might want to get some first quarter coverage done if you haven't already done it. The corn market, if we hit some stops above the 370 area, we could go to 380. And then with the carry in the market, we could be above $4 pretty quickly in the 19 contracts. And in the wheat market, there should be some stops above 527, 530 in the December. Again, 560 has been a big price, but given the carries in the marketplace, you know, doing a little bit of coverage here right now might be beneficial. Again, long term, normal crops in the world next year probably will limit the upside in wheat prices. We'll also be watching export sales today. Good corn sales will support corn prices. If the pace in beans and wheat continues below the level to get the USDA numbers, that could offer some resistance. We'll also be watching an Egyptian tender. Over the last couple of days, we've heard that some of the Russian ports may not export for 90 days because of quality issues. So if Egypt decides to come in and buy some U.S. wheat, that might help the wheat market. We also know that outside markets, a little bit of tension going on. Besides U.S. and Iran, you've got U.S. and China. Some ships kind of came close the other day in the South China Sea. We also noted this morning that China may have hacked into the Amazon area, and so using small chips and maybe looking at other U.S. businesses. So we'll have to see how Washington responds to that. We also have the ongoing political issues going on in Washington, but so far the stock market's making new highs, although this morning it might open lower, and the dollar is also continuing to work higher. So what's going on in Washington doesn't seem to impact yet the U.S. stock market or the dollar. So we're watching export sales, we're watching money flow, and we're watching U.S. weather to see what impact that has on prices, which technically right now shows a little premium being added to the marketplace, whether it's because of weather or just short covering as we get into the end of the year. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.